And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani, and we've had that space is the place. You've heard that? We believe it here. I'm a big space enthusiast. That NASA Mars landing, it was hugely successful. Got a lot of people excited. And while we are waiting for Cathie Wood's space ETF to actually appear, there are two existing space ETFs that are already out there that are raking in a lot of money, and we've got both of them here. So let's talk with Andrew Chanin, who runs the Procure AM Space ETF, the symbol UFO. Matt Bartolini from State Street runs the Spider Kensho Final Frontiers ETF, the symbol is ROKT. And my old friend Tom Lydon from ETF Trends joins us as well. You know, guys, I want to start by just referencing that amazing Mars landing, because they did it with a video, for crying out loud. They put out a couple days later a beautiful little piece of tape here. They've provided just tremendous footage of the landing. Look at that, including the parachute opening, which is, you know, my favorite part of the whole thing. You can see also the dust being blown around as Perseverance was landing. And when you consider how much could have gone wrong with this whole thing, it's really quite amazing. It's truly one of the great technological feats of all time. I mean, just look at the simulation that they're doing. It's quite amazing. Matt, the Mars Perseverance landing itself, it's gotten everybody excited at this point. I wonder what you could weigh in here. There's a lot of publicly traded companies that help build that particular lander, and it's rare we get to say, hey, that company built that. But maybe you could help, you know, point it out to us. And your Final Frontier ETF's got a lot of those companies that built some of this.
That's right, Bob. You know, the space exploration industry stretches beyond just sort of rocket manufacturers. You know, obviously, reusable rockets have, you know, generated a lot of interest into the marketplace and created a lot of efficiencies. But there's also the, you know, components and suppliers of, you know, different parts of space exploration that extends to something that is in the public space. So a company like Maxar Technologies, it's part of our ETF. They are a builder of robotic arms for NASA since essentially the Apollo era. And NASA's Perseverance rover brings the sixth Maxar robotic arm to Mars. There's also other firms like Teledyne Technologies. They are a company in providing aerospace and defense electronics. And, you know, you're talking about the video, you know, like some of their electronics help with the image sensors on the Mars rover Perseverance. There's other companies like Heiko Corp and Mercury Systems. You know, these sort of traditional, people view them as traditional aerospace and defense companies, but they have a large impact on the space business. And part of our approach is to not capture just pure plays, but also the ecosystem supplying this, because there's so much left out there in terms of the space exploration business to uncover.
Yeah. And Matt, the Maxar Tech, they actually built the robotic arms that are being used for the Perseverance. Is that right, or do I understand that right?
That's correct. I mean, you know, much like how you have firms that make the engine and part of the car as well as the brakes, you know, Maxar Technologies is crucial to the ability for what we're seeing here on NASA do in terms of, you know, identifying, you know, potential life forms on the surface of Mars. And I think that's just great innovation. Yeah. It's something that we seek to capture with our suite of Kensho ETFs, and obviously with Rocket, with space.
Yeah, it's very exciting. Andrew, as exciting as it is, I can't help but think, watching this for so many years, it's really tough to invest in space. There's not a lot of things that are out there. I remember 1970, I was very invested emotionally in the space program. I was 14 years old. I wanted to be a physicist. And for Christmas, I got my first share of stock. I got one share in a company called Kawiki Brolco. They made beryllium, which is useful in the satellites, but it's used also as a space shield to protect against heat. And my father gave me one share in a company called Kawiki Brolco, and they made the berylliums, the space shields. And the company got bought out the next year, but it was the first time I ever had a stock certificate, one share of Kawiki Brolco, and I was so excited about it. That was 52 years ago, or 51 years ago, but it's still tough to invest, you know, in space. Can you break down the various subsectors for us? What's out there? I mean, obviously there's satellites that you're involved in, but there's rocketry companies and robotics companies that Andrew was talking about as well.
Yeah, UFO is created to essentially make it easier to invest in space by having companies from around the world that are specializing in all different areas of the space ecosystem. So, what is space? Space, is comprised of companies that are satellite manufacturers and operators, launch equipment companies, companies creating hardware and software for space. A huge part of it, though, is communications. And when you actually look at the numbers for how big the space industry is, roughly 1/3 of that is coming from broadband internet and communications, typically using satellites. So that's a major, major part of the space economy. So you can't leave out satellites, in our opinion, if you're trying to invest in the space industry. But really, you've got companies that are maybe doing a little bit in space, and they're not really a space company. But then you have companies that are doing majority of their revenues from space. And because UFO has a global focus, it allows for the opportunity to include many different companies from around the world. And many of them are pure play companies that you'll find in UFO.
Yeah. Tom, weigh in here. I know you watch this space as well. Obviously, if you look at Andrew's largest holdings there, a lot of them are satellites. That makes a lot of sense. I mean, they're, in terms of pure plays, they're the best ones that are out there. Do you anticipate, though, given the enthusiasm, the excitement generated by the Mars landing, the fact that we've got private companies involved as well, 3 big billionaires involved, as well as Cathie Woods getting involved, do you think there's going to be a lot more out there to invest in the next couple of years? We're not going to be trolling around looking for just satellite companies, are we?
No, well, you're right, Bob, and a lot of people are sharing your enthusiasm. However, I think what Andrew and Matt are pointing out is the ETFs that are touching on this area aren't always the same. Their construction isn't the same. Their strategies aren't the same. And this is one thing we want to make sure we highlight. When you look at UFO, it's really earnings focused. And that's the premise for the components of that ETF. 44% is in the communication services sector. And then you go over to Rocket, ROKT. It's more of a index utilizing artificial intelligence, maybe more growth-oriented than earnings-oriented. Not saying one's right or one's wrong, but we're going to see expanded areas, obviously in the ETF space with Cathie coming on too, but it's going to be important to lift up the hood because this area is not going away. It's going to be with us for not years, but decades, but there are going to be a lot of different ways to play it.
Yeah, I guess what I'm excited about is we've already got some. So obviously we have the aerospace companies. Then we have manufacturing types, which we discussed earlier, like Maxar Tech. We have Virgin Galactic. Hopefully we're going to get SpaceX soon. Any thoughts on that one, Andrew or Matt? SpaceX?
Yeah, I mean, Tom, when
are we going to see it?
I mean, still unknown, right? I mean, it's been a private company, continuing to get series funding in the private markets. Obviously, it's a very similar run to Tesla, and that eventually went public as well. I think when we talk to investors about focusing on sort of space exploration, is to not just look at the high-flying names of SpaceX or Blue Origin there in the private markets, but showcase what companies in the public markets are help supplying them. So Aerojet Rocketdyne, their products and services are going to be part of the Blue Origin New Shepard, one of the rockets that are going to be coming online in the near term. I think that helps underscore the sort of opportunity that you're seeing in space because there's sort of 3 catalysts that are sort of mutually reinforcing the opportunity right now. More efficiency. You have more government support. The Department of Defense has increased the budget related to space investments over the past 3 years. And then on the last one, you basically have more commercial use cases, more applications actually here down on Earth in terms of satellite technology. So, while there's a lot of attention paid to SpaceX and Blue Origin, there's real components in the public markets. And that's what we're really trying to seek out with Rocket that people should be aware of.
And I wouldn't leave it just
and Andrew,
there.
I wonder if you could Go ahead.
There's also companies that are benefiting from successes by companies like SpaceX. So they're able to get the cost of launch down, and that's going to allow more companies to send things into outer space cheaper. So they're really opening up the entire environment for space companies and future would-be space companies to lower those barriers of entry.
Yeah. And Andrew or anybody, just weigh in on that relationship, that public-private partner relationship. So we've got, Elon Musk, we've got Virgin Galactic and Richard Branson, we've got Jeff Bezos, we've got 3 billionaires that are involved here. Can you characterize how they are interacting with NASA? I mean, Musk is at one time a collaborator and also a competitor of NASA. I'm wondering if somebody can comment on how that is playing out. Are we, the investing public, are we space buffs, that we are benefiting from that collaboration / rivalry? Somebody want to tackle that?
I like to think so, because what you see is these companies are actually competing with each other on these NASA contracts. So to the extent that they're actually lowering the cost for NASA to embark on these various missions and goals that they have, they're actually freeing up more of NASA's budget to be able to invest in other areas of space. So this competition, I think, is very healthy. Not necessarily every company is going to be a winner, but hopefully this competition could drive down prices and also let the best technologies win. So I think it's a really exciting environment that NASA's actually going out and not just contracting these private companies, but public companies as well. I mean, if you look at the database of contracts that NASA has and other similar bodies, there's over 300 publicly traded U.S. companies that actually have these various contracts. So it's not just necessarily a pure play space company that might get a contract, but it's really opening up opportunities for everyone.
And I would sort of add to that too. I was just going to add to that the United Launch Alliance. That's basically Lockheed Martin is part of that, and their purchase or pending purchase of Aerojet Rocketdyne is one of the reasons, is a result of SpaceX. So trying to compete with SpaceX by acquiring Aerojet Rocketdyne, which helps reduce the cost of missile launch due to reusable rockets. So I think you can see the sort of derivative effects of a private company impacting the public markets just from that one example of Lockheed and Aerojet.
Yeah,
that's a very good point,
guys,
because I was
just to add, Bob, a little bit. It's important to talk about what's going on outside of the atmosphere here, but also when you look within our atmosphere. Areas like in rocket actually have deep sea applications. There's a lot of companies involved in drones, air taxis, electronic or electric aviation vehicles. All that stuff's coming, and not all that's going to be a part of this as well. So when you think about the space sector, there's a lot to cover for sure.
Yeah, I think you brought up a very good point there, Matt, about Aerojet Rocketdyne being bought by Lockheed, because remember something, NASA has been building big rockets for a long time. Elon Musk is now building a big rocket that is directly competing. There must be hundreds of NASA engineers there who've been working on a big rocket for decades who are looking at this saying, are they going to replace me, essentially? So that's why I bring this up. I'm delighted that Elon Musk is bringing enthusiasm and efficiencies and real technological advances to the space race. I think it needs it, but at the same time, there is a certain competition, as exemplified in Aerojet Rocketdyne being bought by Lockheed there. Andrew, I see your assets under management here up 200% since Cathie Wood announced that she was going to start that space ETF in January. I want to play a piece of the interview I did with Cathie last week where she spoke about space and her upcoming ETF. Let's just take a quick listen to that and see if it's available there.
The costs associated with launching, with rockets themselves, with antenna, they're all coming down dramatically, thanks to both the private and the public sector. But I think the private sector has really helped NASA out here. You've got Elon Musk, you've got Jeff Bezos, you've got Richard Branson in another way. And on the technology side, we see SpaceX and Blue Origin pushing the envelope. So costs are coming down and the technologies are finally ready.
And obviously, Cathie is not saying when the ETF might actually be out there. But guys, there's some speculation out there in the press that since she made it in January, it's possible we could have an ETF announcement by the end of March. I don't know. Anybody want to weigh in on that? And knowing Cathie Wood, any thoughts on what she might include in that ETF there?
Yeah, Bob. So I can jump in there. the good thing about Kathy is she really doesn't hide what she likes, and you can already dig into some of their ETFs now. ARKQ, the Autonomous Technology and Robotics ETF, has a couple companies. One is Kratos Defense and Security Solutions, KTOS, where it specializes in direct energy weapons and unmanned systems and satellites. And there's another one also in San Diego area called Trimble, which has a water management software where they use satellites to help farming as far as agriculture regarding water management control. So she's got high conviction on those two. You could probably guess they might end up in that ETF, and I think there are a lot of people that are dissecting her current ETFs to see what she might own in ARKX.
Yeah, I like that a lot. So Kratos is KTOS, right? The symbol on that?
Correct, yes.
Yeah, and Trimble is what?
TRMB.
T as in Tom, RMB. I didn't know that symbol. Thank you. Those are two good guesses. Anybody else want to weigh in on any of this? Obviously, they're going to.
Trimble's actually one of our holdings as well, so certainly would be happy to see that getting added to other portfolios. But one thing that hasn't been mentioned too much is her firm actually sub-advises a fund out in Japan focused on the space industry as well. I believe through an SMA or mutual fund with the company Nikko AM. So someone could probably look to that to get some ideas as well as how she considers looking at the space industry.
Yeah. What I'm excited about, I mean, obviously, as I told you, I got my first stock at 14 years old, which was a space stock, essentially. So this is a personal interest to me. What I'm excited about is space is now part of the thematic indexing. I've never particularly loved that there are 11 sectors in the S&P 500. I mean, nobody buys consumer discretionary sectors. No nerd. I mean, modern nerds like us do, but modern people who like to invest think, I want to invest in cybersecurity. I want to invest in solar. I want to invest in clean energy. I want to invest in space. So it's thematic ETF investing. That's the way people naturally think in their heads. Nobody divides up the world into, consumer discretionary and consumer staples necessarily. So I'm enthusiastic about it because of that. I just like to see more companies involved in it. And once people understand, how important space becomes, you get more educated, you get better at it. The problem is the same problem we had with the Bitcoin thing a few years ago. It's hard to get a pure play that's out there. So the more space that's out there, and the more Elon Musk gets involved, and the more Virgin Galactic gets involved, and the more Jeff Bezos gets involved, the more I like it. Matt, when I look at ROKT, what I find intriguing about it is that it's really a combination of two sub-indexes. One is about space travel, and the other is about underwater, essentially. It's sort of like New Frontiers, as the name implies. But one thing very interesting about what you guys do, and this is probably Ken's show, is you really, it's not an earnings base. It's really, you scan companies using a sort of an AI system for search terms to be included in the index. And that kind of is determined. Could you just educate us a little bit about how you determine what goes in there? I find that scanning methodology you use very interesting.
Yeah, so Rocket employs a robust systematic artificial intelligence approach to capture innovation within space industry, both pure plays and suppliers, and that doesn't really require an analyst to cover the industry, which I think is helpful in capturing the broad-based nature of something like space, which is, a very nascent area. So we don't really consider revenue generation, given that is a backward-looking metric of what has been done. Screening for how firms are describing their material operations, however, may provide a forward-looking view into the future, which I think is an important aspect for a next-generation trend like space. So we will utilize a natural language processing process to scan regulatory filings of firms, their 10Ks, 20Ks, and 40Fs, to understand what they're saying in their material operations as it relates to space. And we'll search for things around space mission assurance, space imaging, space communications, space tourism. We will have satellites in there. And I think the big part is with 5G, next-gen connectivity companies and satellites, we want to make sure that these are the companies that are involved in space and are not really the home entertainment or satellite companies that are just using that service. We want to make sure that they are more than users of the technology that they're innovating. So that's the way we capture this market. We look at their prescriptive statements to understand how these firms are investing and innovating within space to attract the both pure play and suppliers to the ecosystem.
And Andrew, describe how the weightings in UFO and how that operates, just so everybody's clear about the differences.
Yes. So we have a former director of the Space Foundation and a whole team that looks at the universe of space companies. I think not looking at revenues is actually something that's not going to give you really pure play exposure to the actual industry that you want to invest in. And kind of by Matt's logic, that equates to me as investing in something called a health food ETF where the top holdings are McDonald's, Wendy's, and Domino's. If you want to invest in space, you might want the actual companies that are deriving a large percentage of their revenues from space. So for us, that was really important. We could have signed up and licensed a number of indexes out there, but it wasn't until we met the folks at S Network, learned their approach and their focus on actually analyzing the companies and understanding and defining the space industry before we felt comfortable moving forward. So we're very excited to have a license on the first index to be recognized by the Space Foundation as the world's first certified space data product. So for us, revenues was actually something very important because I've seen too many kind of gimmick products out there before where someone tries to capture or capitalize off of a fad, a trend, or a buzzword. But when you actually dig down into the holdings, you're not maybe getting that exposure that you want. So it doesn't necessarily mean that companies are bad, but for someone trying to necessarily invest in the space industry, for us, it was very important to provide an actual fund that's investing in these companies that are deriving a large percentage of their revenues from space.
Yeah, and I wouldn't say our fund has a gimmick approach that we're using prescriptive documents that are regulatory filings that have to conform to some form of policies per the SEC. And, there's severe penalties for a company misstating their material operations. And I think it is constructive to utilize some sort of textual-based approach to understand how companies are investing their resources from a capital expenditures perspective. I think it can cover a larger swath than what revenue can do, particularly given that revenue contribution can be somewhat low for some of these sort of more fledgling companies.
Hey, Bob, if I can weigh in,
thank you very much.
Just
go ahead,
for
Tom.
A quick second,
get the last word.
Just in closing, so it's great early stage to see the gloves coming off, and this is a competitive environment. But I think back to that 14-year-old Bob Pisani when he got his first stock. Think about the next generation coming up. What a great gift to be able to give them shares in UFO or Rocket or Cathie Wood's ETF. Because it's really exciting and it helps people learn how to invest. And finally, in closing, Bob, little birdie told me today's your birthday. So happy birthday from all of us in the ETF business.
Thank you.
Happy birthday, Bob.
Thank you for bringing that up. Yes, I think back to that 14-year-old Bob Pisani, and it scares the hell out of me, more than 50 years ago. But he was a great kid. I liked him very much, and he's still there. He hasn't really gone away. Science fiction is still my favorite genre of all movies. I'm a huge science fiction fan. One day we'll do a segment on the history of science fiction movies, but that's not for this show. Guys, thank you, and Tom, thanks for the best wishes. Thanks to Tom,
have a great day,
and Andrew, of course. You can see all of our shows on etfedge.cnbc.com. And remember something, I'm going to keep Andrew around to talk a little bit about, a little more in depth about the space program for our podcast. etfedge.cnbc.com. Hey, tune in Monday, 1 p.m. We're going to survey the spring real estate market with a hot new REIT ETF. Everybody have a healthy, happy, and safe trading week.
Get the ABCs of ETFs with the ETF Edge newsletter, your weekly update on the hottest trends in the nearly $4 trillion market of exchange-traded funds, expert analysis, actionable ideas, and exclusive insight from host Bob Pisani. Sign up now at cnbc.com/ETF Edge newsletter.